Hello, everybody. It's Michael here. Welcome to your next installment of the Supply and Demand Market Report. I hope you're all well and continuing to keep safe in these times. Very, very uncertain times for everybody. So I hope you're all managing to make it through. Okay. So we're going to look at a bunch of charts today, and hopefully we can get to all of the markets in the time that we have together. We're going to start as usual with the US dollar, and we'll go through the supply and demand levels that are coming in play and what the market is doing on the daily time frame, which would be for short-term daily income supply and demand trades. Okay, so let's get started with the US dollar, shall we? Okay, so looking at the US dollar, obviously the narrative has been poor for the dollar for a while now. We've seen the market come out of a distributive phase and has come down and has been basing for about a couple of months now, and it's not really gone anywhere. We still have the demand level that is holding prices down, being that one. It's been tested several times, and the chances now, as far as the methodology suggests, is that it's quite a weak level now. The fact that prices have not been able to continue to break down is suggesting that the chances of an upside break are much higher. Now, above current price, we have this level, but I want you to be mindful of the fact that if we do break above this lower level, clearly we're having a trend change. And until once that trend change starts, then all these supply zones will be lower probability, because then they will be going against the new and emerging trend. In terms of demand levels below, we have this one, but I also want to point out this level. It's not one that would be that easy to see, because the move away, for example, hasn't been that great. We haven't had that initial push away for enough of a distance that we would like the initial 2-to-1 move away from the level, but you can see that the market has clearly been using that level as an area to buy at, showing the strength that is beginning to come into the dollar, the demand that is beginning to come into the dollar. And you can see the wicks at the bottom here suggesting every time that a sell-off was attempted, even with this big down candle, with prices being up here and eventually closing way down here, buyers have come in at every opportunity they've had so far to buy this up. So those are the slight nuances, not just looking at the zones, but also what is happening with the price. The zones are obviously what our bread and butter is, but it's always good to be a well-rounded trader and understand what it is that we're looking at as well. So all of this are just suggestions that the market is giving us, information that the market is giving us. So looking at it now, one would have to say the chances of a breakout to the upside are much higher than a breakdown. I mean, that may change as more information comes out, as the market continues to trade. But for now, what the market is telling us is that it's put in this low, having shaken out traders who were trying to get short below that level, and quickly gone back to an area that it's tested before. The last attempt to sell off again, once it got back to that area, has been met with significant buyers coming in. So unless we can take out this level, then we're going to focus on prices more likely to go through this level, in which case then we can start to look for any pullbacks to any demand levels that may or may not form at this level, to see if we get a trend to the upside. Another pattern that may form if we do break out, which in this case would be a drop base and a move up, would be a rally with a base and then a move up. Those are the only two types of demand zones that we look out for. So just bear that in mind, that the dollar is showing intrinsic strength, which would work against, say, the euro, which has started to show intrinsic weakness. Now, the euro managed, for its case, it's obviously the opposite to the dollar. It managed to make it to that supply zone, which is the opposite of this demand zone down here in the US dollar. So they're not exact opposites, but obviously they are similar, because the dollar, the DXY, is made up of a basket of not just the euro. The euro is the biggest one in there, but yeah, that's why they're not exactly the same thing. So it has made it to its supply zone, but it is also struggling to come through the demand that is down here. So those are the two levels that the euro is stuck in. Given how many times that the demand zone has been tested, you have to say between the supply and the demand below, the demand is the weaker one. So if anyone stands a greater chance of being broken, it's the demand. But it hasn't happened yet. And we're not usually of the mind to anticipate too much. We always prefer to sell at supply and buy at demand. The demand zone below current price is there, and obviously we have another one there. Again, just like in the dollar, if we have a breakdown here, then we are potentially looking at a move down to take out this demand zone, potentially a rally to try to then engage a short for the next move down. Right, that could be a rally base drop, or which is one of the demand the supply zones we have, or a drop base drop, which is the second type of supply zone that we have. Those are the only two supply zones. So just a quick reminder lesson for those of us who may be relatively new to the methodology. Only two types of demand: prices going down, a drop, basing sideways, going back up, drop, base, rally up. The other type of demand is a rally, a base, and a move up. What's called a rally base and a rally. And for supply, you have only two types: a rally up in price in an uptrend, a base, and a drop. The other one is a drop, sideways movement, and a fall down. Drop, base, drop. These are the four price patterns that we look for within the methodology. So watch for the creation of one of these two types of supply zones if price does break down through this level. That's the dollar. Watch for the two demand zones, one of the two types of demand zones to be created if we break above. Right now, it's a watch for the two of them to see what price does do. Okay, and these are daily charts, so there will be opportunities on smaller time frames, because the other layer within the methodology is using multiple time frames to try to be able to get a jump on price action as we go deeper into looking at what exactly price is doing when price reaches these levels, using intraday time frames. If, for example, we're using the daily, we could look at a 4 hour or a 1 hour sometimes to see what price is doing at these levels. Okay. All right, so let's go to the US dollar Japanese yen, looking at the daily chart for that one. So that has continued to battle with this big demand zone. It's come in the first time, it's come in deeper the second time. We can see that the rallies, though, a tell sign for us is the rallies from the demand zone with each deeper penetration has not carried prices to new highs. It has stalled at this level up in here, roughly around there. Prices, when they've rallied, they've not gone beyond that area there. Now they've pushed in deeper. So if that pattern were to continue, where we continue to have these lower highs coming in here, one would have to assume that this area would be an area of interest, looking for supply zones. As you know, with looking for supply zones, we always start with where price is. We go up and we go left, looking for areas where there have been big moves down in price. Now, looking at that, looking for supply in this area, we see a couple of levels, and I don't know if you guys can see the second level, which is this one, but the first level is all of this above. Now that's quite a lot of trading. We don't usually want this much trading at this level. What helps this level is the fact that this one is right below it. This would be what we would term within the methodology a level on top of level scenario, which is one of the stronger types of levels you would find, because it suggests that the stacks of orders on top of each other. So those two levels, watch them and see what happens. If we get a break higher, looking for selling opportunities at these levels would not be inappropriate at all. Whether they hold or not is something that is an unknown, and it's not really what we focus on. We try to focus as much as possible on process, not outcomes. We don't know what is going to happen next, and as I always say to my traders on the round table, anyone who knows or who says they know is not being totally truthful, because this is speculation. As much as we now call it trading in this day and age, what it is that we're doing is speculation. So those two levels are the areas we would speculate that sellers would come into the market to try to take the US dollar back down against the Japanese yen. Okay, remember, this is for short-term income now, daily income. And the US dollar Swiss looks very much like the dollar index. It is trying to hold its demand level down in here. We have supply levels above, but by the time prices get here, this is the concept I want you guys to please start paying attention to as much as possible. If we're having a pattern down here, which is clearly a basing pattern, prices moving sideways, and we break out of it, having based for a significant amount of time, of several days, weeks, or on monthly charts, even months, drop supply zones may only produce temporary stalls in price, and not necessarily big, deep pullbacks, especially if they're this low after an initial breakout. And you are likely to find that one of those two demand patterns we talked about will be created as prices move up into those levels, making it more difficult for any selling that people may attempt at these levels to be quickly met by buying. So just bear that in mind. So for the US dollar Swiss, we are not at an area that we would be interested in, long term, or even not even long term. We'd be interested in initiating a sell, because again, this band of selling that is up here is yet to be removed. We don't want to be buying into this type of area. Despite what on the intraday time frame, this move will look like a clear, and it is a clear uptrend. For example, if I take you to a 30-minute, you can see the prices have been moving up as we break down that whole move to the upside. But we don't want to be buying into that. Okay. Taking a look at some bonds, looking at the US bonds, the 30-year bonds, very, very tight price action. Nothing exciting. You see a lot of these markets, because of the uncertainty with the pandemic and everything, a lot of markets are going sideways. We have started to see moves in the stock market, but for a lot of the other markets, it's still fairly sideways as we go on here. Okay, so the top side is being set by supply there, and we're kind of in the middle of these two main areas. Again, nothing to do but to wait and see, as prices have tightened significantly in this whole area here. There will eventually be a move to the upside or to the downside, but in this case it's unlikely to produce too much of a change unless it's a big move. Why do I say that? Because we have a roof of supply above there and a basement of demand below there. So any breakouts of the tightening, we would still have to watch for traders to want to buy it at this level or sell it at that level. Unless we get a breakdown outside of this blue area or a breakout outside of that upper blue area. For now, nothing much to do. Gold had a significant move yesterday. It's been trading sideways as well for several days now, having come up, broken down through demand zones. It broke, I believe it broke, what's the low there? That would be the bottom of the zone. 1863, 849, 1862. So it removed the buyers at this level as well, going right into a downtrend, which only a supply and demand trader would look at this chart and refer to it as a downtrend. Bear that in mind and note that I'm saying only a supply and demand trader would do that, because this particular move down fulfills one of the two criteria we look for when we are looking at market turns. The fact that it's only someone looking at this chart from a supply and demand point of view, only someone like that would say we're in a downtrend and I want to look for a short, is possibly one of the more significant disadvantages of the supply and demand methodology. You're probably thinking, yes, he just said disadvantages. One of the things about being a practitioner of any methodology is to know when to deploy the best environments that your methodology works in, knowing the advantages and disadvantages of that methodology. So it's not all, well, I'm definitely not into that game of there's only one methodology and this is the only methodology that works. There's so many ways of making money in the market. So looking at this market now, we have had sellers come in. Sellers have clearly come in at this level. The next area where we might find buyers is this conglomeration down here. And there's a little bit left, it's not as clean, a bit more sloppy just below it, and prices are stuck between these two levels. So if I'm going to look for an opportunity to buy gold, for example, I would probably be looking here. I wouldn't be doing anything with gold where it is right now. I have supply above that's fresh, not being tested, demand below that's fresh, not being tested. Again, bear in mind that a lot of our competition is going to be looking at this and saying this is still in an uptrend. And so you will still have a lot more people on the buy side than you would on the short. Just a little tip there for you. I hope it makes sense. Always thinking about what other traders may be looking at. All right, looking at the S&P 500, they tried to sell off yesterday, but buyers at the end of the day came into the market and managed to get it off its lows and close around the middle of the range. But again, in a market that's been making all-time highs for so long, and frustrating anyone trying to hold a short in this market. We have seen sellers come in again, taking out demand level. We've now come to another really sloppy, what we wouldn't even consider to be a significant demand level, because of the very poor move away from that level. It's definitely not the kind of move that would set alarm bells ringing for a supply and demand trader. But prices are there, and we can, from yesterday's action, see that sellers have come in. Just looking by the wick in the price action from yesterday, that buyers did come in at that level and closed it outside of the level. Now, whether that is all that they've got, time will tell. If we're going to look for an opportunity to sell this market, we are now in a downtrend, as far as the methodology suggests, with lower highs and lower lows, with demand zones, as we said, being removed. And the market is using this, or has used this area as an area of supply as well, even though, well, actually it's not bad. It's probably a big, just about a big enough move away at the initial move down to this price here. It's not too bad. I've seen much worse that has worked, but prices have returned to it and pulled back down. So if we rally again, you can be sure that there will be traders who will be trying to sell it around that area up there again. So let's bear that in mind. So for now, the momentum is to the downside. We are going to be coming up against demand levels, and this market actually paints a similar scenario to what I was talking about with the euro and the dollar, where you have a trend change that has occurred, but you then have levels below. So we have a trend going from being up to now being down, with lower highs, lower lows, demand zones being removed. So what's going to happen at these levels? We are going to probably get temporary bounces or pauses, sideways movement in price when price gets to these levels. What's going to provide the turn back up? That's harder and more advanced to tell for a supply and demand trader. We have levels. We know the lower we go, the better the demand levels, the stronger the demand levels. So it'll be difficult for you to, with confidence, beat your chest and say, yes, that is the level it's going to turn on a dime and go back up to a new uptrend and clear to new highs. Nobody knows that. What we do know is that as a turn happens, like we've seen here, we are going to get the possibility of the markets falling down, coming up and breaking any supply zones that may be here, in which case that means demand zones are now being created again, which shouldn't happen if the trend is down. So looking for the first pullback after that event may then be the opportunity to be one of the early ones to get into an emerging new trend. Okay, so just some slightly deeper explanations to what may happen as prices turn, to look out for those things. Okay, we clearly have demand levels below current price right now, but who's to say where ultimately this market is going to stop going down and start going up? Being aware of these levels is important, but it's nigh impossible without a crystal ball to know which one is going to be the last level that is going to cause the turn back up, if that makes sense. We play the levels as we see them. All right. And the UK market, which is not one that we look at often, but I've added it for our UK viewers. It had one of its biggest drops in the year yesterday. It's been a quiet market, unlike the US market that's been making new highs since the fall back in February, January this year. We haven't gotten anywhere near those levels. So we can see the supply levels that are here, again, another level on top of level type scenario. and this little base drop supply that has been holding prices down for several weeks now, even months. Going for demand below, we have fresh demand down in here. We have tested demand at this level. And prices are now coming down, looking at those levels. We haven't been able to break through all of that. So we wouldn't be looking, I know some of you may be looking at that, but that wouldn't be, it wouldn't qualify as demand for us, given what we've been talking about, especially with the move away. I know some of you are looking at the end of the downside momentum, and you would be correct, but I want you to also again think about the pattern that other traders are looking at. At best, this market has gone sideways. It's ended this current downside momentum. Has it become an uptrend yet? No. So if it's no longer down and it's not yet up, we only have one other scenario, which is sideways. Okay, so watching this area, I would more focus on the fresh levels below. If I'm trying to buy here because I'm looking at a change in the trend from being down to being up, making the case to buy there for a short-term intraday move, okay, maybe, yeah, going down to some small intraday time frame in there, okay, let's not rule it totally out. It's a possibility. It's you can hear from my voice that I'm struggling to fully make a case for it, because there have been several times where, because this is one of the earliest signals, if not the earliest, the ending of downside momentum is with the break of the momentum line, is the earliest sign a supply and demand trader would get of a potential change. Being it's the earliest sign means it occurs more often, and so it is also one of the less reliable of our signals within the methodology. That's why I'm humming and ahhing about saying that I want to start going long in here. If I do look to go long, it'll be with confirmation, and a lot of it, I wouldn't be looking for confirmation on a 2-minute chart at this level. I would probably want to see confirmation on a more significant intraday time frame, anything from, say, a 15-minute and above, or even maybe a 30-minute and above. Okay, so not all levels are created equal. So bear that in mind. Okay, I'm going to try and speed up. I don't want you guys to fall asleep on me on the video. All right, so looking at crude oil, just bringing the chart in, it just seemed to lose all impetus up into this whole area up here. It just seemed to not be able to get above that price. It's fallen away. It's taken out these lows here, but it's come back now. So we are still forming a top in this area. We haven't fully decided where we want to go. Yeah, we haven't. The crude oil market hasn't really decided where it wants to go yet. So any selling would be early for sure. And do we have levels to do that at? Well, we're using this. The market is using this one, which is really one of the worst kind of levels that I hate. Those hate is a strong word. I don't hate things. I just don't like them. So the reason I'm talking about the level like that is because the wick has gone beyond the base. They do work sometimes, but it just suggests to me that the order flow at this level is not what caused the move down, for example, in this case, because prices had to go through that level, got new sellers at a price that is higher than the basing period before falling. what tends to make them work is how big the move is. So if you have a significant move like this, the chances of it working are higher. Like in the Brexit candles, if you go over your charts from June of 2016 when Brexit happened, you'll see that there's a wick like this above those candles, and they have worked for the most part, because obviously with the Brexit news the move was quite significant. But for smaller moves away, not so good. So for now, we have this scenario. What is happening also, though, is that there will be buyers down at this level. There will be buyers down at that level. Why? Because we have been able to trade through that supply zone. Plus, given the fact that this wick jutted above the basing candle here, there will be supply and demand traders who will see that as a pivot move. That will also cause a break in the downside momentum that happened here. So again, the early sign has happened. We removed one supply zone. What hasn't happened is this market turning into an uptrend. Yeah, so it's still fair. It's still stuck in a sideways range. Okay. All right, going to the pound. The pound is definitely down. Has removed to demand zones, at least, if probably more. Again, similar kind of wick to what we just described, and you can see the significant move, and prices have come back to it, and it's being used as an area to sell. We have demand below us that prices are yet to get to in a downtrend, a rally-based rally, which is a continuation pattern. And when we say continuation pattern, I always ask my traders, a continuation of what? A rally-based rally is a continuation pattern for an uptrend. Is this market in an uptrend? The answer clearly is no. So rally-based rallies, the higher they are in the price ladder, the less likely they will work. Sellers are dominating the market at the moment. Often these levels will at best be pause points or targets for shorts to exit with some of their profit. Okay, we have levels below us, so with demand levels, the lower you go, the better or the stronger the levels will be. And again, we don't know which one of these levels is going to be the ultimate level where prices are going to stop falling and turn back up into an uptrend. We will see that as it happens. Early warning signals with ending of downside momentum will happen. Supply zones will be removed. That will happen. That's the strongest signal. That will happen. It's not supposed to happen if a trend is down, right? So once we see that begin to happen for sure, then we will know that there's a change in trend and be one of the early ones to get in. Okay, it's easier said though. I've described the process to you. Doing it in the moment is what will require all of your skill level. And when I'm referring to skill, I do not mean just reading the chart. What we focus on is the mental side of things on the round table, which is the small trading group that I run for traders who've been mentored by me and have come on either the one-to-one mentoring with me or the video course that I provide. Having the knowledge is a big part of it, but the application of the knowledge is what we focus on in those sessions. All right, getting close to the end now. The Aussie US dollar, nothing much happening with this one. Again, we've seen that sellers are trying to come in, and rightly so. When we've had such a significant move, there will be profit taking. There has to be. Anyone who has been holding for so long, even if you have traders who've managed to hold for that long and made such a significant amount of money, have to take some off the table at some point. That's that is expected. So we have sellers. Now there's temporary selling and there's trend changing selling. So far we haven't started to see trend changing selling just yet. I say trend changing selling not because we haven't removed demand, but in terms of selling that is big enough, large enough to get people to sit up in their chairs and say, well, this is not good, this is changing, something is not right. For now, all we've seen is this market go flat. It may go flat for a while. It may go flat for a while in here and ultimately go back up. We don't know whether that will happen yet. Or it may go flat and eventually go, fully to the downside. We don't know that either. What we know is it's gone flat. We've been able to sell up here. We've managed to get some profit. And then taking some profit off at this level would be the most appropriate action, if I may suggest, whilst we wait to see if we do have a more significant move. That is a demand zone that is clearly held. It hasn't carried to new highs, but it hasn't been broken either. Okay, so those are all the considerations when we're looking at these levels. So if someone put a gun to your head and said, you have to make a trade in the Aussie US dollar today, it wouldn't be to go short because of where you are right now in price. You are at demand, which, as we said earlier, we don't go short at demand. We try to buy at demand. Okay, so those are the two levels in the Australian US dollar for daily income for now. Okay, and the New Zealand dollar, similar. This one is showing a little bit more strength because it's still holding most of its demand. It's broken above the supply level there, so you can see that it hasn't gone into its own, sorts of sideways. But it isn't moving high up with closing at higher highs with as much strength as we've seen it in all of, again, a market that's had a significant move. We've had our what we call our shelves, our basing patterns. We've had a little one in here, a little one in there, and ultimately you could argue that this whole area right here is part of one big basing pattern that has now had a failed breakout attempt, a second failed breakout attempt, and it's come back into that level. So the fact that we didn't get a close higher, we got a wick, and we've quickly come back into the range is suggesting that we are losing the impetus to continue to go higher. So weakness is subtly coming in. It hasn't fully established itself yet, but it is beginning to show that. So we won't be buying at this level, even though it's a demand level that is holding, just for all those reasons. So again, a slightly more intricate description of what is happening and what we look out for. And finally, we made it. Finally, the US dollar Canadian. Again, like like its sisters in the US dollar pairs, it's a market that is trying to turn, and this one is one of the stronger sisters that is beginning to turn back up. It has established higher highs and higher lows now. It has taken out supply, so this market has officially launched itself into an uptrend. So we've had quite a few good examples of what I've been trying to describe today on different charts. So we now have upside momentum established. We've removed a bunch of sellers over here. So this one fulfills criteria number 2 that we look for in a market turning from a downtrend, in this case, into an uptrend. So buyers have taken control in this market at the moment. So we're now going to be looking for pullbacks. So the first area is a little bit of a mess because prices did spend a lot of time at that level. I would rather we have a little bit more of a push up, so we have a clear separation between us and this level before the pullback, and then use confirmation. You will also have the confluence of the upward momentum if prices do return to this level as well. So layering up the opportunities there for a successful trade. So just watch out for that pullback in the US Canadian if we get it. Prices may just continue to move higher and stepping higher, but what we're waiting to see, if that happens, we want to be ready, is that pullback. Okay, so I'm going to end the video there. Apologies for it going on for so long, but I thought if we're going to do one today, let's spend a bit more time than we usually do, and think a bit more about the nuances that are often not discussed in these free videos. So I hope it's been useful for you. You got a little bit of my thought process and what I instill in my traders in this video that I think I've done in a long while, which is fine. There are no secrets in the market. We all have our different ways of looking at them. So let's hope that this resonates with some of you, and it helps you in your trading journey. And if you want to, get more formal training, just send me an email at storehouseanalytics@gmail.com, or go to the website storehouseanalytics.com, where there's information on the training program, the mentoring program that I offer at storehouseanalytics.com, and we'll hopefully get you on the program and sort you out, get your foundations right from the get-go. Okay, I look forward to working with you. And finally, a thank you to all of you who continue to share useful information with each other on the Trading Institutional Order Flow thread on Forex Factory. I continue to be very appreciative of your respect for each other and the useful information that you share and the camaraderie that you all have with each other there. So let's keep that going. Thank you all very much, and I look forward to the next video. Take care, everybody. Stay safe and trade well.